Live from Singapore, essential business news as it breaks and a look at the economic news that will shape the day. This is BBC World News and Asia Business Report.
Wall Street hits another record high as some of America's biggest tech giants report strong quarterly results. And oil prices surge as global demand for energy continues to exceed supply as economies rebound from the pandemic. Hello and welcome to Asia Business Report. I'm Karishma Vaswani. Well, US stocks continue their climb, ending the day on another record high off the back of solid quarterly earnings reports from a number of major companies. You can see there how they did on our screens. Zeroing in on one firm in particular, though, and that's Alphabet, the parent company for Google, which has reported better than expected results for the July to September quarter. The company's advertising and cloud services revenue both nearly doubled from the same period last year. Our North America technology correspondent James Clayton has more.
Well, these are a really solid set of results for Google, but the big take-home is that Google Search is an absolute monster for Google. It accounts for around 2/3 of Google's entire revenue. And as we've been getting out of the pandemic, out of those lockdowns, people have been Googling things more, people have been buying things more, and that's clearly been very good for business. YouTube, a company that Google owns, has also been doing well. That's also a company that relies on advertising, and Google Cloud, too, another part of the business, also has seen growth. So these are a very solid set of results. I think after Snap's results last week, terrible sets of earnings, people were looking at Facebook and Google that are also reliant on advertising and wondering how they would do. Well, it turns out they've had pretty solid third quarters. Google has done particularly well this year. It's done well during the pandemic, and it's also doing very well as the global economy starts to shift away from the pandemic too.
James Clayton there. Well, one of Alphabet's biggest rivals in cloud services is Microsoft, which has reported strong third quarter results thanks to its cloud-based services and gaming consoles. The pandemic has boosted demand for cloud services, and with more people staying home, orders for Microsoft's gaming console Xbox continue to soar, although the supply has been hampered by the global chip shortage. Well, speaking of chips, US semiconductor AMD has reported a more than 50% jump in year-on-year earnings for the quarter ending September. Like Microsoft and Google, the chipmaker has benefited from more people working from home during the pandemic, as demand surged for electronics like computers and gaming consoles. Shares in Twitter are up more than 2% in after-hours trading after the company reported nearly 40% growth in its third quarter revenue. The social media firm says there was only a limited impact from Apple's new privacy rules, which allows users to opt out of targeted ads, a change that has hammered companies like Snap and Facebook. Meanwhile, shares in Robinhood fell more than 8% in after-hours trading. The online brokerage, which claims to be on a mission to democratize finance for all, blamed a drop in crypto trading for lower revenues. From New York, our North America business correspondent Michelle Fleury sent this report.
The investing app, known for its easy-to-use interface, appears to have lost some of its appeal. Robinhood didn't report any new user growth. Customers with funded accounts at Robinhood actually fell by 100,000 to 22.4 million in the third quarter. Now, analysts had expected the user base to rise. And while meme stock trading and Dogecoin stole the show in the first half of the year, those trends appear to have run out of steam. Simply put, there was a lack of viral events to drive growth, and that hit the bottom line. Revenue tied to cryptocurrency trading tumbled 78% to $51 million from $233 million in the quarter before. And Robinhood said that, barring any change in the market environment, the headwinds that dragged down the last quarter would persist until the end of the year. With little reason for cheer, those comments only drove the stock lower.
Well, US regulators have banned China Telecoms from operating in the country. The firm doesn't have a lot of business in the US, but it is one of the three leading communications providers in China. Washington has made similar moves against Huawei, another Chinese tech giant. Meanwhile, Brent crude prices have reached multi-year highs in recent days at around $85 a barrel, caused by a limited supply and increasing demand in the US. It's a trend that's likely to continue as Asian economies rebound from a recent spike in COVID-19 infections caused by the Delta variant. Oil analyst Kang Woo told me his outlook on prices over the next few months.
We are in a very high territory. It's very tight. So for this month and for November, inventory is still low. So we're looking at upper 80s on average basis. Going into the first quarter, Gulf of Mexico production will restore and demand will drop. So we're going to see the ease of the prices in the first quarter of 2022. So for the remainder of this year, it's a challenge, particularly in November. In December, things will be maybe start leveling off in terms of the oil prices.
Do you see supply side constraints diminishing in the future?
They are gradually diminishing, right? The OPEC policy means currently they are short, but going forward, they will be there. And a non-OPEC supply are gradually catching up with some limitation, but gradually catching up in the US and in other countries. So that will ease the overall supply demand situation in 2022 a bit.
Well, let's stay with oil because the boss of the world's biggest investment firm has warned that there's a high chance that a barrel of oil will hit $100. That's even higher than what our guest Kang Woo just predicted. The warning from BlackRock's CEO Larry Fink came at an investment conference in Saudi Arabia known as Davos of the Desert. The BBC's Samir Hashmi sent this report.
The top bosses of Goldman Sachs, BlackRock, Blackstone, in a panel discussion underline the fact that the world is going through an energy crisis, and it's important to recognize that because that could lead to higher inflation. And they also didn't rule out that oil could touch $100 a barrel, which could be a bigger crisis, especially at a time when there's an energy shortage. Now, the other theme that has been discussed is climate change and talking about achieving net zero carbon emissions. Saudi Arabia just announced 2 days ago that they are aiming to reach there by 2060. But they at the same time have been highlighting the fact that it's important to recognize, given the scenario right now where there is an energy crisis, that fossil fuels cannot be demonized completely because they are needed and they're not going away anytime soon. So it's important to adopt a balanced approach.
Is it possible to adopt a balanced approach, though, to fossil fuels? A recent UN report says governments plan to produce twice the amount of fossil fuels needed to reach emission targets they made in 2015. G20 countries have also directed some $300 billion in new funds towards fossil fuels since the start of the pandemic. That's more than they have
from the
towards
BBC
clean
News
energy.
at 6.
Well, Mozaharul Alam is from the UNEP and says there's a clear gap that needs to be bridged.
There is a large gap between the ambition and action to limit the warming to the 1.5 degree to 2 degrees centigrade. However, we are seeing some positive move in the Asia on limiting the investment, particularly on the coal. But overall plan to produce the fossil fuel is not in sync with the Paris Agreement.
In terms of fossil fuels, how likely are we to see a peak in production before demand tapers off and we eventually make the switch?
If we look into the peak, many countries of our region has committed their peak reaching in the 2030. But as I mentioned, that if we look into the fossil fuel production and the investment, it is likely that it is going to be delayed and maybe the 2040, unless the investment is going to be changed in coming year and a decade.
But it's not easy, is it? Countries want to make the transition, but are still stuck in this phase of not being able to do more.
Absolutely. If we look into the transition in the next 1 decade, then obviously the transition, as we know that it requires time, but the transition needs to be supported by policy, supported by finance, and supported by technologies. Moreover, one of the important issues in the transition is the people who are involved in the job in terms of the current technology or the fossil fuel industry. They also need to transitioning from the old job to the new job. So in terms of the transition, the policies, the finance, technologies, and job, they need to go hands in hand.
And can I ask, what is your one hope for COP26 this year?
For the COP26, we need to push the country to raise their ambition. They need to finish the unfinished business, particularly the Article 6, which is the market mechanism.
Quickly, before we go, an independent committee from the US Food and Drug Administration has recommended a lower dose of the Pfizer vaccine for children aged 5 to 11. The regulator will consider the recommendation and make a decision within days. That's all the time that we have for you at this hour. Thanks so much for joining us on Asia Business Report. Do stay with BBC News.